Hey, welcome back, Profit Takers. It's Victoria here with another podcast. And today we are talking about one of the keys to trading Forex, right? One of the successes here is to understand the importance of risk management. So as we all know, trading Forex involves a lot of risks, right? And effective risk management is crucial to protecting your capital and increasing your chance of success in this market. So one of the fundamental things that I'm going to talk about are some risk management techniques. All right. One of them is to place a stop loss. Now, a stop loss or stop order, right, is a predetermined price level at which a trade can be automatically closed to limit losses, right? So when you place a stop order at the appropriate level, based on your technical or fundamental analysis, you can minimize the impact of any adverse market movements and prevent losses from spiraling out of control. So my thing here is, I always talk about when you're placing your stop loss orders, you want to do it 25 to 50 pips away from the day open price. Okay. And sometimes during Asia, and this is why I don't like to trade Asia a lot. Now, if you trade BTMM strategy like I do, we're taught usually not to trade Asia, but sometimes, boy, that Asia, this starts to look real good. Now, I'm going to say there's going to be setups in every session. Absolutely. Okay. But sometimes when I will place a stop loss order and I go to sleep, I'm like, sometimes I'll make that stop loss, I'll make it real tight, right? I don't know why I do that. Sometimes it's really tight when technically I really just need to just either put it on the previous day high or low, or go ahead and count the 25 to 50 pips away from the day open price, right? I think to me is safe. But there've been plenty of times when I place it too tight, and then when I wake up, it's already taking me out, but it's going in the direction that I was headed anyway. The market is trending either short or it's trending long, right? But there's sometimes when I put that stop loss order in, and shoot, I'm glad I did, because my bias was incorrect, right? It's going the absolute opposite way that I was thinking. So it saved me, right? So what you do then at that point is you decide whether or not you're gonna get back in. Some people, they just can't get back in. I will get back in. And this is not to say it's a revenge trading, but there's two different ways you can look at that. And we'll talk a little bit more about that later. But when you get taken out and you're going in the wrong position, wrong direction, then that stop loss is there to save your capital, and that's really the most important thing. Okay, another critical aspect of risk management is proper position sizing. Okay, what does this mean? So basically, this involves determining the appropriate amount of capital to allocate to each trade based on your risk tolerance, okay, and your trading account. So what is the normal rule? Okay, it's a 2% rule. This is where traders risk no more than 2% of their trading account on any given trades. All right. This helps you to protect your trading capital, and it minimizes the impact of losing trades. Okay. So there's lots of free calculators out there that you can use. I'll find some and put them in here in the description if I can. And you just use those to calculate what you should be actually risking on your account. Okay. But then again, I mean, when you follow, I know it's kind of hard to follow sometimes, because even me, I've struggled following it. I'm not even going to lie. But you want to be able to, this is going to help you grow your account slowly, and it's going to keep you from gambling your account. Right. You are eventually going to want to increase your lot size. Once your skill is up to par, right, you want to increase your lot size, because you don't want to be forever being risk adverse, right? You don't want to do that, because, what's the point of trading? The point to me of trading is financial freedom, right? It's getting to the mountaintop. It's having more choices, right? Money gives you more choices, right? It's being able to do whatever you want. It's being able, you're not like, you're your own person. You don't have anyone to report to. You don't have no emails to be sending out to nobody. I mean, this is like, to me, I think it's one of the best professions ever. I wish I knew about trading earlier, because before I didn't want anything to do with it, right? I didn't know. So yeah, it's all about making that money and not gambling, because we're not over here trying to gamble, right? And that just kind of goes into my next point here. And we're going to talk a little bit about over leveraging, right? This is also crucial in risk management. But leverage can also be a double-edged sword, right? It allows you to control larger positions with a smaller amount of capital, right? So this is where you can find those broker accounts that have the 1 to 500 and 1 to 1,000 leverage, okay? Not only can it give you the opportunity to, like I said, to control those larger positions, but it also magnifies the losses, right? Especially when the market moves against you, and it can happen real quick. Okay, so you should carefully consider the leverage, and you want to ensure it aligns with your risk management plan. So a conservative approach to leverage can help to mitigate these large losses, because the higher the leverage, the higher the losses. So, I mean, for me, I would recommend, and you'll notice a lot of these prop firms now, which I didn't know when I very first started to trade. I didn't know about the prop firms like I do now. So there's so many prop firms out there, and I think most of them are only like a 1 to 2, or maybe 1 to 3 if I remember properly, right? But they're not going to let you be messing with their capital like that. Right? So why would you do it to your own capital? But when you're first starting to trade, it's not, you just think that, oh, I'm going to just make a bunch of money overnight. And that's really not that's not how it works, right? We make money over time, not overnight. Okay. So being a disciplined trader and adhering to a trading plan are just as equally as important in risk management, right? So again, you should develop your own comprehensive trading plan, which includes entries and exit strategies, risk management guidelines, and your rules. I have my rules written down, right? I go over them every single day, right? Am I perfect at them? No. But am I getting better every single day? Absolutely. Okay. Absolutely. So when you follow a well-defined trading plan with discipline, because trading requires you to be disciplined, it's going to help you to avoid impulse decisions based on emotions, right? And here's where we're going to talk about, that revenge trading. That's an emotional thing that you're doing when you're revenge trading, right? So your plan helps you to stay focused on your strategy, and it helps you to maintain consistency, on your trading approach. Okay. So whenever you deviate from that plan, I guarantee you, when you deviate from that plan, guys, it's going to expose you to unnecessary risks, and it's going to jeopardize your trading performance. And then guess what you're going to start doing? You're going to start self-sabotaging. You're going to start telling yourself all this crazy stuff that is not true about yourself and your trading, right? I've done it to myself, right? I've sabotaged myself, saying, oh, I'm not good at this. Oh, this and that. Oh, blah, 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 right? When all I should have just been doing was sticking to my plan and being disciplined about it and not deviating. Okay. So in conclusion, guys, effective risk management is paramount in Forex trading. Okay. So you should employ strategies such as setting your stop loss and don't move it. That's another thing. I don't know if I talked about that, but moving your stop loss, just don't do it. I mean, sometimes, like I said, if you have that set from the 25 to 50, or perhaps the last day's high or low, just don't move it, because you can get yourself caught into a position where now you're holding that loss longer, waiting for it to get back to bring you to break even, or taking a little bit of profits. We've all done it. Okay. And you want to make sure that you are using a proper position size. There's calculators for you to do that. You want to avoid over leveraging, and you want to maintain discipline, right? Always want to maintain discipline. Okay. Managing risk is not about avoiding losses. Okay. It's just not, but it's about minimizing losses and protecting your capital, which is essential for long-term trading success. Because like I said, we're in this here for the long term, right? Not for the overnight success. And a lot of traders, when you see them online and they're flashing all their stuff, you think they might be, an overnight success, when most of these people have been doing this for 5, 10 years, right? There's some people who get it right at the very first year, the first year, 2-year mark, right? And some people it takes a little longer. So you can't sit here and compare yourself to these people and they're showing all their accounts and whatnot. You can only do you, okay? So a well-structured risk management plan, it combines a solid trading strategy, okay? Disciplined execution. This is going to help you navigate the challenges of trading, okay? And it's going to help to increase your chance of achieving consistent profitability, because that's all we want, right? And we always want to protect our capital, right? It's just as important as making profits in trading, because you're going to hear people say breaking even is a good day, right? That is a good trading day because you didn't lose anything, all right? You maintained that capital in your account. All right, guys. So I appreciate you all for listening in. Don't forget to subscribe to our channel for more valuable insights on Forex trading, risk management, and so much more. Thank you guys for watching. Don't forget to hit the like button, and we will see you in the next one. Ciao for now.